Thursday, November 2nd, 2017, Monaco 64, home of alternative economics and contrarian views. So it's 9 a.m. London or 5 a.m. New York. I'm going to look at the market, see what they're doing. I want to look at the gold-silver ratio or the exchange rate. Silver outperformed gold quite a bit yesterday, and it's looking a little more interesting. I want to talk about President Trump's pick for Fed chairman as well, and a few other things. So markets, gold right now, $12.76, up $1.50. Silver, 1706, down 6. The ranges have been 1274 to 1282 in gold. And silver, we've been 1705 to 1722. So near the lows in silver. Stock markets, the Dow is 23,405, down 29. We've been down as much as over 80 points. We got down to 23,347. So the market has rebounded. So it's been lower overnight. S&P down 5, 2573, has been down as much as 12. The NASDAQ 100 future is down 15 at 6230. It was down as much as 45 earlier, down to 62, even really 6200. So stock market's getting a little more volatile, if you want to call it that. Currencies, sterling, 132.50, unchanged basically. Euro 160.1633, up 11. Dollar down a little bit against the yen at 114.06, but in the middle of the range. Today, the Bank of England is expected to raise rates for the first time in over 10 years from 25 basis points to 50 basis points. So it's still very much near zero, the official or the base rate for the Bank of England. Historically, since it was created 300 years ago, over 300 years ago, this rate has been probably average around 5, maybe, between 5.5%. So very low still. So let's look at the gold-silver ratio. And I'll actually start with a longer term chart of this ratio. And so the higher the ratio, that means that gold is, outperformed silver, and you need a lot more silver, to buy 1 ounce of gold. And as you can see, 80 seems to be a very important level. So it means you need 80 ounces of silver to buy 1 ounce of gold. And historically, that, as you can see here in the chart, has corresponded to bottoms in precious metals prices. 2003, I think gold, there was a fairly sharp correction from 390 to around 300, if I'm not mistaken. And then from 2003 to 2008, gold went all the way to 1,000. Silver went to I forgot what the level was at the time, but anyway, gold topped at 1,033, I think, or 31 when the Bear Stearns, collapse happened, and they had to be taken over by J.P. Morgan. And then also there you can see towards the beginning of 2009, when the ratio went back up to 80, that's when we saw the sharp correction in gold from 1,000 to around 680. And then from there, we went all the way down to like almost 32, that ratio. That meant that silver outperformed, and that's when gold went to 1920 and silver went to 50. And beginning of 2016, we actually traded above that 80 level towards around 83. And ever since then, we've seen it drop, but lately it's been rising. And so it's still, it still needs more momentum on the downside for us to see a bigger overall move in the precious metals. So you can see that silver outperforms gold in the precious metals bull market. And yesterday was an interesting day because we saw silver outperform gold quite strongly. Am I saying this is it? This is the beginning of a more accelerated move in precious metals higher? I don't know, but it might. So that's why I'm bringing a shorter term chart of that ratio. Then we can have a look and see what's happening in the shorter to medium term. And as you can see, there's a head and shoulder formation here. And we've been testing the neckline for the last few weeks here. And yesterday with the outperformance of silver, we broke through that neckline, which is around 75. And last night when I did this chart, it was around 74.40. That was the taking the closes from last night. This morning, as I said earlier, silver is down a bit and gold is up a bit. So that ratio has gone back up to around 74.70. So still above 75. The objective there would be, and I think that spike there is when silver, there was a flash crash in silver, and that's why we saw that. But I'd say that the objective would be, about $6 lower for some 75. We'd go to around maybe 68, 69. You can see there the beginning late last year and beginning of this year, we tested those levels around 68, 69. That could be an objective in the shorter term. So we need to keep an eye on this relationship, the gold-silver ratio. And it's interesting because when I started out at a small private bank in Geneva back in the late 80s, the guy who was the dealer for the firm, and by that I mean, if my bosses had to change positions, do foreign exchange deals, stock, buy shares or anything, they'd go through him. They'd, write an order, and he'd go to the dealers, to the banks, and he trained us in the back office. And he'd come from a big bullion bank, and he used to be their dollar mark trader, which at the time was the main currency traded. Dollar mark was big. And so he knew what he was doing, and he always had the FX page from Reuters up. And he even told me about the gold-silver ratio back then, that they used to trade it a lot. So, it's something closely watched, in my opinion, still by the bullion banks and by the foreign exchange traders. Don't forget, gold and silver are currencies. They might not be publicly considered currency. Maybe CNN, CNBC, Fox News, or Fox Business talk about it, or Bloomberg News talk about it as a currency. We talk about it as a commodity, but believe me, those bullion banks and their FX dealers look at it as currencies. So, Jerome Powell, well, he's already a Fed governor. He's been there since 2012. But the thing that not worries me, but I think he's a deep state or a shadow government guy all the way. So is Donald Trump trying to keep his enemies very close to him, or is he just a puppet? I know he's come out with all the JFK information. I think the JFK information, the files, yeah, they've confirmed a lot of things that many people know. And I think the people who consider it conspiracy theory, they will still consider it. They don't want to go there, So will it make much difference? I don't know. We'll have to see. But looking, I always look at the guy, So it says here on Wikipedia, Powell graduated from Georgetown Prep School, a Jesuit university prep school. So Jesuit. And then he earned a Juris Doctor degree from Georgetown University, Jesuit University. And he worked for Dillon Read & Co., major investment bank on Wall Street. He worked for the George Herbert Walker Bush administration in the Treasury. He was Undersecretary of the Treasury for Domestic Finance after being nominated by George Herbert Walker Bush. And he was also began working as a managing director of Bankers Trust in 1993, quit in 1995 after the bank got into trouble after several customers' large losses due to derivatives. And then he went back to Dillon Read. From 1997, this is the most interesting one. This is why I'm saying he's like, part of the shadow government. From 1997 to 2005, Powell was a partner at the Carlyle Group. So it's one of the biggest private equity groups in the U.S. And it was started out by former George Bush Sr. Officials, like, I think one of them was like in defense. John Major, former Prime Minister of the UK, was part of the Carlyle Group. George Bush Sr. Was part of the Carlyle Group. So it's a huge private equity group. I'm sure they're very connected. So this is the guy who's going to be the chairman of the Federal Reserve, or the guy that Donald Trump has picked. He still has to be approved by the Senate. So that's Jerome Powell for you. Will he take the U.S. back on a gold standard? Very unlikely. I guess that's for President Trump to decide if he were ever going to do that. So the other interesting article I saw is on Zero Hedge. It says, Deutsche Bank asks a stunning question. Is this the beginning of the end of fiat money? And I guess it sounds a bit like the stuff I talk about. So it looks like even the mainstream banks are asking the question. One of their analysts, what's his name, Reed, talked about it in one of his research papers. He says, if we are correct, the fiat currency system may be seriously tested over the coming decade, and ultimately we may need to find an alternative. This is not necessarily a story for the next few months or quarters. And earlier, I think he had a paper out about a month ago, and he says, we think the final break with precious metals currency system from the early 1970s, and he puts in quotes, after centuries of adhering to such regimes and to a fiat currency world, has encouraged budget deficits, rising debts, huge credit creation, ultra-loose monetary policy, global build-up of imbalances, financial deregulation, and more unstable markets. He says, we think. No, of course it has. And he goes on to say, the various breaks with gold-based currencies over the last century or so has correlated well with our financial shocks and crisis indicators. But it doesn't look like he says, oh, we should go back to gold. He says we should find an alternative. Talks about cryptocurrencies and the blockchain as well. So that's it for now. If you enjoyed this video, please like, share it far and wide. Subscribe to my channel if you haven't yet. And you can also follow me on Twitter and on steemit.com. And I'll talk to you later. Bye.